Hey guys, how we doing? We are back today. We're going to look at another company that at one point was doing pretty well, but just kind of due to the industry, technological advancements, how the market as a whole ended up heading, started to really decline and didn't have a very good outlook, but due to maybe some random twist of fate, in large part due to a group on Reddit, skyrocketed, created a lot of commotion, but ultimately ended up really just falling downward. So we're going to look at how they're performing now and some of the future performance that they could see. So let's jump in to GameStop.
Alrighty, so you know how it goes. We are going to jump into our Excel spreadsheet here and come to Google, find GameStop's 10K. I've already pulled some of these up here. So we have our different years from 2025. I guess we're going to start with 2024, just given that it's the last full year, going back to 2023, 22, 21, and 20. So we've set up our spreadsheet the same way that they have. So that just being the different parts of revenue and expenses. And so that is going to give us these right here. This one's pretty easy. They just have simply net sales and cost of sales. And then that will obviously give us our profit. And then getting into the operating expenses, just SG&A, asset impairments. One of the years a little bit back, you'll see we have gain on sale of assets. So that's just going to be one of the years in the past, and that will give us our operating expenses and ultimately net income. So overall, the way it's set up is actually pretty simple. So just using these different financial statements, I am going to get these numbers in here. So as always, I've set up some macros just to easily get these numbers in here. So we have our revenues, cost of revenues, operating income, earnings per share, and shares outstanding. Ooh, how great is Excel? Okay, so getting into some of the numbers, we have our revenues, profit, operating expenses, net income, and operating margin. So just a few things to point out. Looks like around 2022 was when that big boom probably happened, 2021 to 2022, the big kind of internet scandal, if you will. And since then, we've really seen our numbers take a bit of a decline, nothing too crazy, but just starting to kind of decline after that big commotion. And you'll actually notice just from the net income, that's the only positive year that we're seeing over the past 5 years. So definitely something interesting. I'm kind of expecting GameStop, as it was something that was very much going downhill before this all happened. I think it really stemmed from a lot of the big, financial companies starting to short that stock, just anticipating that it would continue to go down just because typically people buy games just online through their video game consoles and not as much going into the store. So just kind of an outdated model, and kind of expecting to see that one year having a good performance, and other than that, pretty bad. Just what I'm expecting, but obviously we'll be diving into these numbers with net income showing kind of what I was expecting here. Good news is that their earnings per share have been getting a bit better over the past couple of years. It's been negative, and then into 2023 and 24, starting to show some improvements. We are projecting a negative year in 2025, but then those will ultimately increase. Number of shares outstanding has steadily increased with a pretty big jump in 2024. And so what I'm actually interested to see is down here a bit more at the bottom when it comes to their capital expenditures and especially their inventory. So let's populate these and we'll take a look. So we have here, zooming in a bit. So depreciation and amortization decreasing over time, so that's good. Capital expenditures, we have actually a blank year in 2021, which I feel like that's pretty unusual for a company whose, primary business model is having those store actual locations. So it's weird that they didn't really spend anything in that year. It did take a pretty big jump in 2022 and then steadily decreasing since then. And then, of course, inventory is one of the big things. That's basically their whole business model, is just having the video game video games themselves or accessories in their stores. So they've always had quite a bit. And then in 2022, probably spent a bunch on the inventory just to increase after they had that good year. And then after that, those years have kind of decreased. So that's pretty interesting. About a third. Pretty big jump in the decrease there in their inventory. But yeah, changes in working capital, pretty small relative to the other numbers, but fluctuating up and down. So let's get into the discounted cash flow model and see what that looks like. So we can see on this page here some of the assumptions we're making from the terminal discount rate of 7%, just used kind of the average number that a lot of companies will use of 7, and then terminal free cash flow growth rate. Just did some research, saw what a lot of people might agree as kind of the consensus for this growth rate. I actually thought it was pretty high, 6 to 7% growth rate for GameStop. Seems a bit high to me, but we can go with that. But getting into some of the numbers here. So just looking at first the revenue, holding pretty steady. And then of course, once that 6.75 growth rate kicks in, starts to climb a bit more there. Nothing too out of the ordinary, income before taxes, holding pretty steady. Tax rate is really just something that is resulting from the other numbers here. And then net income really decreasing over these next 2 years into 26 and 27. So obviously a pretty bad sign, and I'm sure that'll affect these numbers down below here. Ultimately, wrapping these numbers up with the free cash flow, so definitely not a good sign here, and kind of what I was anticipating just from the model of GameStop itself. Free cash flows are all negative here, so really going to put a damper on things moving forward for GameStop, and you actually have a negative terminal value as well coming from these assumptions we're making with these rates, even with that almost 7% growth rate. And then, of course, the projected equity of the company is actually negative, so definitely not a good sign. But we can get into what the actual share price we're projecting is, so we can type in debt, cash, shares outstanding, and stock price to get those. So making our way to the balance sheet for 2024, numbers we're going to be looking at are debt, and that is going to put us here at this 2709.0. Guess I didn't need to type in that, but cash, that's going to put us at, 921.7. And then shares outstanding, we have looked this up already. That will be 4, and making sure the scale is correct here, 4473.4. And then, of course, the current share price gives us 23.33. And that is going to imply a share price of $5.43, otherwise giving us this negative 76% downside. So obviously the decision there would be to sell, kind of as expected. But I think overall the valuation for GameStop is going to be a lot more into the qualitative side of things. You can obviously look at the numbers and see they aren't trending exactly how the company would probably like them to be. But as long as they are staying with this kind of brick and mortar model and not transitioning into more of a digital landscape, they don't seem to be headed in the best direction. So that is our decision for GameStop. Looks like we should probably sell.
And there you have it. Numbers for GameStop are looking pretty clear. Does not look like a good buy at the moment. So pending any future Reddit groups coming together, probably not the stock you want to be putting your money in. Thanks for checking us out today.